So what's going on with interest rates? It's April 2022. Here's what's going on in the market. Rates have gone up, no doubt about it. Today they're averaging a little bit over 5%. So what does that mean for the market? The price is going to go down? Are people going to be able to buy a better deal right now? I don't think so. I think the demand is still pretty high. We're still seeing strong demand of buyer pool come out. And we had a lot less inventory come on the market in January, February, and that has not come on yet. We're starting to see inventory come on the market from March and April as the weather gets warmer, and I think that trend will continue, but we're not seeing it be ridiculous all the way through. So as rates have risen in history, you have still seen prices increase because people want to make a jump to it right before interest rates go up even higher. So you're seeing a little bit more of a demand push. It's the springtime. That's very, very normal for things to happen like that. So Fannie Mae says that for every 1 percentage point that interest rates go up, the home price appreciation goes down by 4%. So if it was 11%, maybe it's 7% now if the rates increase by 1%. So we have seen about 2% increase on the last 6 months, and we'll probably see a little bit of growth to some leveling out throughout the year. Where do we see rates going, through the end of the year? They probably will hit 6%. What does that mean overall for the housing market? I think it will just bring some stabilization. Right now, like I said, there really hasn't been that much inventory in January, February. March and April, we're seeing a little bit more, but I don't think we're going to make up what was projected to come on the market in January, February, which will still keep this in a decent balance of supply and demand. People ask me, is it a good time to buy a house? In my personal opinion, I still think it is. 5%, 5.5%, 6% is still a great interest rate. If rates are 17, you know what? It's not a good time to get a mortgage, but hopefully we're not going to that. But at 5 or 6%, rates are still really, really low. And housing is a great hedge against inflation. If you're going to be in your home for 10 years, 15, 20 years, whatever the case may be, it's going to fluctuate regardless of when you buy. You can have a time in the market just like you can time the stock market, your retirement accounts. You just don't check the values every day. That's how you stay sane. So I do think it's a great time to still purchase a home, and hopefully, not everything is going highest and best. That if you're looking to buy a property out there, you'll be able to get something without going crazy. And I think as that kind of levels out, we'll see some more supply, because a lot of people have said, you know what, I'm not going to sell my property right now because it's a fortune to buy what I want and I can't get it. So I think as we see some stabilization, I think we'll be overall in good shape. Home prices are definitely still forecasted to go up this year, and I think that they will. I think at the end of the year, we'll see 3 or 4% appreciation rather than the 10% on average throughout the U.S. that we've seen. So it definitely is a strong, seller's market. It is still a good time to buy. Have any questions, want to see what's going on with your property, or want to see how to get yourself into a new property, feel free to reach out. Happy to go over things with you.